Are there any tax loopholes that small businesses or LLC owners can take advantage of?
People say tax loopholes, and sometimes I chuckle because a tax loophole is something that it's legal, it's in the law, but it basically something that it has unintended consequences. Congress set it up. They didn't know it's going to be like that. And then it turns out that it's benefiting one person versus the other, right? So one of the loopholes I can tell you is how you set up your entity and who owns the entity, okay? If you set up your entity to be an LLC, you're going to be treated a little bit favorable versus someone that owns a corporation, okay? If you're a US person versus a foreign person, there are different issues here, right? So one would prefer to be, a foreign person that receives foreign source income. And then one will also, a US person cannot get out of that situation because a US person is taxed on worldwide income, okay? So when it comes to a loophole, it's all about, fact and circumstances and how your tax preparer is applying the law, because loopholes are the law. It's not like something that's illegal that someone is trying to circumvent the system. It's basically something that it already exists, but then the difference, let's take an example. When you file your tax return and you claim itemized deduction, right? You claim all your mortgage interest and your property taxes and all of that. And I file the same taxes, I claim standard deduction. You probably may get more deduction than me, but why is it so? It's probably because I have not, that could be a loophole for a taxpayer who does not know. If I did not know that I needed to claim an itemized deduction, if it's higher than my standard deduction, and you are claiming standard itemized deduction, it means that you know something that I don't know and you're taking advantage of it, right? So, exploring loophole is basically something that if someone knows the tax code, we don't even have to worry about the loophole. We just apply the laws as it applies to your situation and then go through that.
I really like the way you define loophole there. It's very true. People hear loophole and they think, ooh, I'm doing something which is maybe illegal, or crap, I hope the IRS doesn't see this. But the way you define it's pretty clear. It's taking the tax code as written and applying it in the most favorable way for you.
Yeah, you apply in a favor. And one loophole I can tell you, everything could be a loophole, like capital gains taxation, right? A foreign person will not be taxed on capital gain. If you own stocks, you sell stocks and you make capital gains, you will not be taxed on it if you've not been in the US for 183 days or more during the year that the stock was sold, right? But a US person will be taxed regardless if they are, they're a US person. A US person can take advantage of that loophole and say, look, I have so many stocks. Maybe I have some stocks. I don't want to sell it now, but I don't want to pay taxes on it either, right? One way they can do that is they could hold on to the stock till they die and then, transfer the stock, or, in their will, they transfer the stock to whoever is going to inherit it. So in that way, you've postponed the taxation and you've even created a step-up basis for the stock, right? So the person that takes it from there doesn't pay taxes on the, on the stocks that they receive as inheritance. If you have so much, wealth, it could be added to your estate and your estate pays taxes on it. But whoever is receiving those stocks will not pay taxes on it. Now, another thing is a US person who wants to avoid capital gain taxation could say, look, why don't I renounce my citizenship or permanent residency, so that all these stocks that I have, provided I'm not a covered expatriate, and that's a very complicated situation, but those covered expatriate are those who are worth 2 million or more, or have paid taxes of about 171,000 for the past 5 years and all of that. It takes a lot to be in that situation. So let's just say you're not in a covered expatriate position, but you have some stocks. You want to avoid taxation, capital gain taxation when you sell it. Most people will renounce their citizenship. And then when you renounce it, you become a non-resident. Guess what? When a non-resident sells stocks and get, capital gains, what happens? It's tax-free, right? So assuming they don't stay in the US in 183 days, that's tax-free. So Those are some of the loopholes. It's legal, and it's basically how you see it. Yeah.